The Financial Sector Conduct Authority has approved amendments to the JSE's listing requirements that will allow the exchange to split its main trading board into two different segments. This will allow for the JSE to implement its plan, which it announced in April, to restructure its main board into a prime segment and a general segment. The new approved structure will see new rules effected on Monday, the 23rd of September. To share why the JSE felt it was necessary to change things up and how it's likely to impact on the various stakeholders, I'm joined by Andre Visser. He's Director of Issuer Regulation at the JSE. Thank you very much for joining us, sir. So stock exchanges are where companies go to list to raise capital from public investors to invest back into their companies for growth. And the South African JSE has served that role for many decades. So please elaborate to us on the splitting of the exchange's main board and why a decision was taken to do this.
Good afternoon, Nompu. Yes, I think the announcement that we published brings into effect the market segmentation project, and it's an attempt on our part to segment the main board into two distinct segments, the prime segment and the general segment. And the main objective of the exercise was to provide appropriate relief for smaller companies that are listed on the main board. A cornerstone of the model still retains transparency and disclosure, so it still is a cornerstone of the market. But what you will see when these rules come into effect and when companies start migrating to this segment, that there would be appropriate relief for those smaller companies, significant cost savings, cutting of red tape, and creating a far more enabling environment for those companies to raise capital.
So my understanding is that the big guys, the guys with big market capitalizations will be under prime, and then your smaller to medium businesses will be under general. Just, give us some ideas about what's going to happen under general in terms of how you're going to cut them some slack or give them some leeway so that they're incentivized to actually list and stay listed.
Thank you, Nompu. Yeah, I think it's important to recognize that on the main board, we've got companies that are very diverse in size. So some of our larger companies would have market caps in excess of R1 trillion. And then you've got much smaller companies on the same board with market caps of tens of millions. And I think the key question was whether it's appropriate to maintain a framework that's identical for companies that are as diverse in size. So the answer we came to was no, it's not. And if you look at the proposals that will come into effect on the 23rd of September, it would be issues like a far more flexible financial reporting regime, where those smaller companies would have more flexibility on how they report and when they report. There will be much more flexibility provided around issues like raising capital, which we think is an important catalyst for smaller companies to raise capital. And then there's issues around cost savings, and there's a whole raft of changes that will bring in cost savings for those companies. But we think a big focus is to create an environment where these companies can still maintain their listings on the JSE, raise capital, but at the same time still provide investors with full transparency and disclosure.
So in practice, are there going to be any changes for some of the existing companies that you have listed on the main board? Will some automatically go under the prime segment and others under the general? How is it going to work in practice?
Nompu, we have a choice in the matter. We could either default companies into a certain board. We decided it would be more appropriate to give companies the choice. So we created the framework, and with effect from the 23rd of September, companies that are eligible to go to that board can apply to the JSE, and we will transfer them into the segment once it's up and running. It's important to note that not any company can apply for classification in the general segment. It's only available for companies that don't qualify for the all-share index. And if you look at our main board companies, there's approximately 114 or 115 companies that will be eligible to apply for transfer to the general segment. So that's just over half of our primary listed population on the main board that would potentially be eligible for this flexibility.
So for a number of years, there have been concerns raised about the rate of delistings that have happened from the JSE. How much of a game changer do you think that this new structure will have in terms of keeping companies listed and even attracting new ones to come on board?
So, Nompu, I think it will certainly have an impact, but it's important to recognize that the delistings on the JSE is not unique to the JSE. It is a global trend that we've been seeing. So we obviously need to make sure we create the right environment from an economic perspective, from an incentive perspective to get companies listed. This announcement that we made is the JSE's attempt to deal with matters that are within our control. And we think that creating a more fit-for-purpose environment for these smaller companies will play a role in maintaining companies onto the JSE, but also very importantly, attracting new companies to come to market.
And lastly, why should I, as an investor, be interested in investing in smaller companies on the general board?
Well, I think it's important that we recognize that the JSE's role is to provide investors with choice. And if you look at the suite of products that are available on the JSE, it ranges from very large companies that you'll have access to, but also very importantly for smaller companies where the upside could be very significant if you invest at the right time. So we think with an environment where there's full transparency, full disclosure, and a flexible environment for management to run the business, we think there is potential for investors to look at those counters as well.
Andre, thank you so much for your time and your insights there on what the JSE is doing. That was Andre Visser. He's Director of Issuer Regulation at the JSE.